Today's event, you will be listening to Jordan Bastarache. Jordan grew up in a small business family and at a young age learned the importance of financial plan and how important it is to a family's future. Now backed by 8 years of experience in the financial services industry, Jordan is committed to helping clients achieve their financial goals. In previous roles, he gained valuable experience as a financial advisor and a premier banking advisor. He is passionate about building strong, long-lasting relationships with clients while providing solutions to help them secure their financial futures. Today, Jordan will be going over 10 key decisions for business owners. I'm very excited to see what he has to say, and it should be a good one. So take it away, Jordan.
Thank you all so much. I appreciate that, Liam. A very kind introduction. Really, I typically like to have these sessions in terms of like a more informal basis. So if you have any questions or have anything that you want to ask, just feel free to pipe up or message it in the chat. Caitlin, I just might need it while I'm sharing my screen. I might just need you to monitor the chat if anyone has any questions there, because I don't think I'll see both. But yeah,
Absolutely.
Me just share my screen and then okay. Can everyone see that?
Yes.
Okay. Awesome. So as Liam said, we kind of foresee like how the business life cycle works, and we like to view it as there's 10 key either decisions or circumstances that you'll find yourself in that business life cycle where you should either be asking questions or just considering different options, depending on what aspect of your what aspect of your business is or how it operates. So 10 things we'll be touching on today is what is the structure for your business, or what you need to be considering if you are starting out, how you can reduce your taxes for your business, what you should do with surplus cash if you do have it, how you can build employee loyalty, how will you reduce your risk, what can you do to deal with the unexpected, do you intend to retire from your business, will you sell your business, how can you keep your business in the family, or what will you do once you retire? So very much of a chronological report, or a chronological view of the business cycle. The initial stage is how you want to set up your business. And I think the big consideration, if you decide between a sole proprietorship, partnership, or corporation, is really the scale of your business. Because the advantages of a corporation and what we deal with more on a day-to-day basis it's more advantageous for a corporation, but that also has to be considered because it has higher administrative costs and costs just to operate. Does the financial return in your corporation offset the tax advantages or offset the risk that your business may operate, since your personal liability in a corporation is more limited, where as part of a sole proprietorship and a partnership, you do have that exposure. So it is really circumstantial, and I think you'll find that a lot from today's session is that it is based on individual circumstances, but those are just some of the questions you need to ask yourself or speak to a professional to consider. Then once your business is operating, I mean, I think a lot of us will, if we can avoid taxes, we typically try to. So really how your corporation operates, how can you reduce those taxes? So there's many different ways to, and depending on what your circumstances, you may be able to either offset your personal tax strategy in terms of what you're pulling from the business, by income splitting, by employing a lower income family member. So we see this a lot with certain spouses. If the spouse isn't working, then they may do the books in order to be able to be paid. Or make your family members shareholders in the corporation, so you can, or indirectly through a trust, so you can use multiple capital gains exemptions. I'll touch on that a bit later, just because it is a part of the selling side of your business, but it is something that's a very good tool to use and take advantage of. Then also in terms of the business side of the taxes, how can you structure it in a way where it makes the most sense? So potentially, if you're beyond that small business tax rate for that annual year, would it be the best to potentially bonus down just to maintain that qualifying small business corporation tax exemption? That we see quite often on our side of things. And then whether individual pension plans make more sense, or retirement compensation agreements. Those I would say are extremely unique and more on the like a small percentage of the population would take advantage of that. We actually have dedicated teams on our end just to weigh the pros and cons, if that makes sense. But it is just something to be aware of if it's there. And then there's also ways to buy tax exempt insurance through the business. A lot of times people want to extract business funds into personal funds as much as possible, and oftentimes insurance is the best way to do so. And then what should you do with, yeah.
Sorry, just wanted to jump in. I think Ren has a question. Yeah. I don't know if you can see who has their hand raised or not when you're sharing your screen. So I just wanted to.
I can't. Yeah. So yeah, feel free to go.
Ren, do you want to go ahead and ask your question?
Yeah, thank you. No worries at all. My quick question was in the first decision one. Sorry, next one. Decision two. You were talking about private Canadian corporations. I might have missed it, but are you using the word corporations as like actually an incorporated unit or any business?
Yeah, so that would be more of an incorporated unit that I would be referring to, just because if you're incorporated, there's ways to get around your there's more tax advantages potentially for corporations, which is why oftentimes we see on our side there's more incorporated companies that we deal with versus any sole proprietorships or partnerships. So yeah, that would be on the corporation side.
Okay, sure.
Incorporated. Thanks. Anyone else have their hand up that I can't see, Caitlin, so far?
I think you're good.
Okay, great. Where was I? Okay.
I have a question.
Yeah.
Can a person be incorporated in two businesses?
Yeah, you can have
and
multiple businesses.
Each business would have different criteria, or they're going to be added together?
Well, it actually depends, because if there's certain CRA rules that actually fall within, like you can't create multiple corporations that are doing the same service in order to say you're trying to exceed that small business tax exemption and you're beyond the threshold. There's certain CRA rules that will keep you within that. So say your net profit is, and you're trying to just split it between two companies, you can't really do that. But there's ways to like bonusing down, for instance, to bring yourself into that. So yes, you can incorporate two separate businesses, but if you're doing so in order to avoid certain tax rules, then the government's typically clever to catch on to that, I would say.
Okay, because suppose my husband has different business and I have different business, would that be considered one or different?
Well, do they operate separately? Like,
Yes.
Are you providing separate services? And so you each can incorporate your own business. Like we have plenty of clients that have 7 or 8 corporations that do different things. Yes, you can. Short answer is you could certainly do that.
Okay, thank you.
Yeah.
We do also have a question in the chat here. Deborah's asking if you can explain the tax exempt insurance a little bit more.
So if let's say you have, and I'll get into this surplus cash in a way where let's say your plan is to get money out of the corporation and do it personally, and you're the only one operating that corporation, you can the corporation itself is able to own own an insurance policy where either your family is a beneficiary. So the corporation pays the premiums on the life insurance, and then upon death, it pays out to your family tax free. So that's sort of what that is alluding to. If that makes sense.
Thank you. I think that's all the questions in the chat here.
Perfect. Yeah, and once you get to the aspect of operating and you're finding, let's say you're finding success, you need to consider what to do with that surplus cash. The amount of times we talk to business owners or individuals and we just ask them, what's in your business checking account, doing nothing for you? And it's a number that's way too high in order to justify that money not working for you. It's just something to keep in the back of your mind, where if you do have surplus cash, there's different ways or opportunities to take advantage of that. So if your business has a need in the near future, let's say you have a tax bill that you're expecting, but it's 4 months away, the ability to either put it into a interest-bearing product for that time period, or it's just something to consider based on the timeline that you will have that surplus cash. Or do you expect to have a personal need on the other end for that cash, where maybe you want to pay off your mortgage and it makes more sense to take income in your specific circumstance? You don't really want to do something that's intended for long term with that surplus cash in the corporation, because you're taking it out anyways. And then are you going to need it for a longer term goal like retirement? So a lot of individuals will see is if they have to bonus down to get into that small business threshold, are they able to take the money personally and then deposit it into their RSP to offset that personal income, and whether that makes sense or not. So those are a lot of things that accountants can help walk you through. And then sometimes there's ways based on your structure that there's tax effective ways to withdraw the surplus funds out of your business, which you may have at your disposal. So one is if the corporation needs to repay a loan you made to the corporation yourself. Or another way might be if you have a positive balance in a capital dividend account, which is sort of, if you've been investing inside of your corporation, you can build up a balance to do so, and you can withdraw the capital dividend as a tax-free capital into yourself. So we don't recommend you do that on a year-over-year basis, but it is something that a lot of people, as they're either they've built up a bigger balance, they do take advantage of that the government provides. Any questions after that, Caitlin, on anyone's side?
Still looking good.
Okay. And then there's different ways to build employee loyalty. Like we see, or the business owners we discuss with, they have a hard time, getting employees and retaining employees. So just different ways to consider incentivizing an employee in order to stay for a longer period of time. So one might be an employer-sponsored savings plan, like a group RSP, where an employee puts a certain amount in their RSP and the business matches that. Or even a non-corporate sponsored RSP. And let's say you just set up an ability for an employee to take off from their pay directly into an RSP. It just incentivizes a more long-term situation for employees. And then I touched on IPPs and RCAs, but again, that's related to a very small portion of the population. And I think getting into the minutia of that will be a little bit on the more extensive side. But also, like, just thinking of non-financial ways to reward employees. So if they need more work-life balance or a healthy work environment, or they want to be treated in a certain way or have a certain structure in which they work. So those are different considerations that you can make in order to operate the business that works for both you, because you're retaining a long-term employee, but also the employee because they remain happy. And then how you can reduce risk in the business. So this more touches on potential creditor claims and how you can offset that risk. So in terms of protecting your personal assets, so let's say you might be at least partially exposed personally because of your corporation. Maybe you think about gifting assets to family members, or insurance policies are another way to that are protected from any creditor claims. So that's also an advantage of looking at insurance, and then any registered plan. So if your funds go into an RSP, that's also protected from any creditor claims. And then you can also have different operating structures or structures in terms of like a holding company or trust that benefit your family members and not yourself, to have that as a safety guard. And then different ways to protect business assets. So one thing you have to make sure of is that you're not looking like you're deliberately trying to put assets beyond the reach of creditors. So if you do that, they'll oftentimes kind of follow the chain reaction of that, and you might not be as protected as you're expected. And then another way is, again, operating the business as an incorporation, just because that has more limited personal liability than a partnership or a sole proprietorship would have. And then if you transfer assets between separately incorporated business, so that's where you'd look at creating a structure with a holding company or investing company in order to hold those assets, which might help protect that against any creditor risk. And then remove excess cash not needed in the business now or in the future. So if again, that just deals with more of the surplus cash basis. If you can take it personally and then protect it beyond that, which was the previous slide, then that might be a consideration for you to have.
We do just had a couple of hand raises.
Sure.
Marcia, I think I saw your hand first. Do you want to go ahead?
Thank you. I just had a question. If you had two separate businesses and one was more of a, I guess, like a nonprofit kind of thing, and the plan was to transfer, so the profits from one to, so the second one is like a sanctuary kind of, right? So the idea is to, once the other business is profitable, to take some of that to support the sanctuary, and then have some of the I'm going to be specific to my idea here, is foods and things grown from there to go back to the other business, which is like a restaurant kind of thing. So you create a circle. How is there special rules for that, or?
Yeah, that might be, and apologies if I don't have the answer. I think an accountant would be best suited, but I think what you're asking is that each business kind of grows in the life cycle of each other, where one's benefiting from the other. I would leverage an accountant just to see if there's what the flexibility is on operating those businesses, because I'm not sure if there's a specific manner where you'd either need to make sure you're charging fair market price of the goods you're selling to the other business in order to avoid taking a loss in this business in one to benefit the other. So I'm not sure of the specific accounting rules for that, but it's something that if you're considering that, I would very much advise to at least get counsel or accounting advice before venturing down that road.
Awesome. Thank you very much.
No problem.
Ren, did you also have a question? I saw your hand.
I did, yeah. It's kind of a dopey question, Jordan, so sorry about that. But in the last slide, you mentioned remove cash that the business isn't going to be used now or in the future. I just want to know if it's not being used now or in the future, like what are the other options? Like,
yeah, so I think that's more just alluding to transferring it out of the business itself, and whether that be.
I see. Okay, gotcha.
Yeah, exactly. Like if you're not going to use it, and let's say you have operating expenses, there's different considerations on passive income in corporations. So we obviously you're going to want a safety guard for your business and how it operates. So I wouldn't say be 100% aggressive on removing that excess cash that you're not going to need. But if you're fairly confident that you're not going to need to utilize that, then I would just get advice on maybe creating a different structure to consider if like maybe putting it into a holding company or maybe taking out personally in order to reduce your profits. So I just think it's alluding to removing that cash in a strategic way in order to make it more beneficial for yourself.
Gotcha. Thank you.
Yeah.
Thank you, Jordan. We're all good.
And then like this is a big thing that we deal with a lot of business owners is how to deal with the unexpected. So a lot of businesses, like you've operated in a way where say you're to the stage where you're very successful, you want to avoid any undue risk and any one risk to yourself or any risk to your family in terms of like if a catastrophic event happened, which is and most times death. So if you can cover like either your business expenses, let's say you need to operate as a physio, but if you become incapacitated, you can't. So how does your family offset what you were bringing in? And then usually when that happens, there's excess costs that come with that too. So it's certainly something to always consider if you are overly exposed to that. And then let's say you have a business where two partners own it, and you like what happens if one of those partners die? So we oftentimes fund buy-sell agreements where if both partners or the business is paying a premium and there's life insurance on both partners. So if one partner happened to die, then the other partner buys that partner's shares via the life insurance proceeds, and the beneficiary is really the family. So it's offsetting if something were to happen to you, your family actually gets paid in that hopefully unlikely event. And then another thing we deal with a lot of businesses is there a group or a certain few of key employees that business needs to operate on? And what if something happened to those employees? So for instance, a lot of businesses will buy term life on that employee to offset the potential benefit that employee gives the company. So if the employee is planned to work at that business for the next 15 years, oftentimes we'll see businesses buy term 15-year life insurance policies while that employee is with the business. And then you also want to make sure you're creating a divorce strategy. Unfortunately, that happens in our society more than you'd think, or unless you're aware. But it's something that families can get affected by it. So you always want to make sure there's a buyout situation in the event of a marriage breakdown. And specifically, if you have two partners in the business and they're each married, that should be in place beforehand. It's not something really we do on our end, but we oftentimes tell clients to seek out counsel just in case of that event. And then, do you tend to retire from your business? So you've worked hard throughout the life cycle of your business, and now you're kind of considering that winding down process. So you just want to make sure you have the sufficient funds for your retirement, and whether and how those funds are dispersed for yourself. So it can be difficult to predict like what you'll get from your business when you originally sell it. So before winding down, you just want to make sure that you're set aside from that, and then also saving for retirement outside of your business, which we've touched on before. It is good to oftentimes keep assets within a certain structure, but you also want to make sure you're protected on the personal side. And then what's going to happen to your business? Like, are you going to sell it? Are you going to pass it down to a family member? Do you have an exit strategy, or is this sort of a business that ends with yourself and you have sufficient funds to fund that retirement? And are you maximizing the tax advantages? So that's one thing that we deal with quite frequently. Is there is ways to take advantage of multiple small business exemptions. If that's the structure of your family, and if it makes sense, you can conduct what's called a state freeze and essentially have the business owned by certain entities that eventually lead to a trust, and the trust can have your family members as beneficiaries. So not only can you take advantage of the profit from the sale yourself in terms of that exemption, but you can also have it for your family members. One thing to note, though, is if your kids, for instance, have aspirations to open a business themselves, you don't really want to put them in a circumstance where you're using their small business exemption and not being able to not being able to utilize it themselves. And then, are you going to sell your business? So a lot of times through this process, we tell individuals to make sure you're consulting experts like business brokers, legal tax experts, tax advisors, and business valuators, just to make sure you're getting everything out of the business that you can. And one thing is, like, you don't really want to wait. You want to make sure that you're as prepared as possible. So don't wait until you're under pressure to sell and forced to accept something when you want to be done with the business, or make sure you have all financial statements and tax returns in place when you do this, so you know what the business deserves. And then just a couple other things. You want to ask potential buyers to sign non-disclosure agreements to protect key business information from competitors. So say that's within your realm, you just want to make sure, because you oftentimes have to provide them with information, and you want to make sure that's not going to affect you negatively down the line. Keep the business going strong until you sell. So a lot of people, with their winding down, or they're tired, they tend to maybe let the business decline, which could eventually affect your selling price and affect your retirement for you and your family. And then look at strategies, like I've alluded to before, to take advantage of the capital gains tax exemption for the business. How can you keep your business in the family? So one thing I like to start with this is, does your family really want, like a lot of individuals, if they're business owners and they want their kids to take over, do their kids really want to do that? And I think just taking an honest look at what their needs are going to be, because you don't really want to force their hand into doing so. And if that potential person that takes over the business has displayed interest or a want to take over, or are you just kind of going off of a whim because you have a personal sentiment towards the business? You want to get on the same page as who's taking over to make sure everything is in place and it's a smooth transition, not only for yourself, but also your employees and other stakeholders. So do they have adequate training? Do they have adequate education? Do they have adequate mentoring to make sure they have the experience to take over this business? So a lot of considerations go into that transition that people just need to keep in mind. And then what you'll do once you retire, and that's the biggest question. A lot of people are busy to the point where they haven't really thought about what the next stage looks like. So just making sure your financial aspect is one thing, but then also the mental aspect is another. And whether you really want to do this and whether what will make you happy in that moment, right? It is something that we see a lot of adjustments from business owners, and it's a difficult adjustment. But just keeping in mind what you want that to look like, and then how you want your wealth to look like as well. So do you want to spend everything you have and in the most efficient way where it's getting you to the end of your life, but you're also enjoying it as much as possible? Or is your priority to let some family members maybe reap the benefits of your hard work? So it's just, that's kind of a lifelong thought process that I find is always beneficial if you start earlier, because it lets you have a more adequate plan for it. And then this is more special rules towards farmers and fishermen, which I won't really get into the minutia of it because we oftentimes leverage special departments for that. But it's just keeping in mind, if you are a part of these industries, to know there's more tax deferred or tax advantage benefits for yourself, and to seek professional advice to make sure you are taking advantage of it. And then also, if you're incorporating your professional practice, so a lot of individuals that are maybe higher income earners, or they don't necessarily need a ton of personal income, they'll incorporate, and you'll see it a lot with doctors and dentists, where there's more tax savings and more deferral benefits for incorporating how you're operating. It's subject to rules and guidelines of a regulatory body that's governed by its specific profession. So I'd always double check on what those regulations are. But we see it very often where it's oftentimes of a benefit for you to do so. There is cost and administrative requirements for this, but oftentimes your tax savings or your the implications of it outweigh any costs associated with setting it up. And then so that's just, we've kind of touched on a lot of those, like reducing federal and provincial corporate tax on the first 500,000. So that's like your small business or tax exemption, any capital gains exemption on the shares of your professional corporation. That we don't typically see as often, just because oftentimes you're not really selling your corporation unless it's an actual practice. So unless you operate a practice, then typically the incorporation goes with you when you retire. And then you do have potential protection from any business creditors if that's how you operate. And that's more on the creating a practice side of things. And then that's kind of all I have. My information is listed there, which I'm sure the presentation will be sent to all of you, and you have a recording. But if any of you have any questions, I'm happy to answer, and I can stop sharing so I can actually stop putting the burden on you, Caitlin. Let's see. Perfect. Good. There we go. And then copy, explain tax exempt insurance more. Okay. I think we're up to date on questions. Does anyone see any hands up?
Think I don't know. I'll jump the questions off. Thank you so much for that presentation. It was a really great resource, and it's not something I knew a lot about beforehand. But I guess I don't know. Would you say like that succession planning and those contingency plannings would be like a good place to start right from when you're working on your business plan, or kind of as you kind of establish your business?
Yeah, I think that's a lot based on your your personal structure, right? Like if you have kids and you operate a business that you eventually think your kids could take over, you're not going to necessarily do that while they're children, but it is something to have in the back of your mind of whether you want your family to take over or a potential sell of the business. So I think it's just having that in mind. I don't think from the start it's 100% necessary that but just keeping in mind over a long period of time that you're not going to be able to work forever. So how does the next step look?
Right. Thank you. Does anybody else have any questions?
Yeah, I have a question. Mine is a prototype business at the moment. What would you suggest structure once I start my company?
So in terms of your prototype business, are you...
At the moment, I'm sole proprietor.
Okay.
And
are you referring to creating a prototype that can are you like on the innovation standpoint, or
yes,
is it
yes.
more?
Yes.
Yeah. So I think a couple of different things that you need to consider is, one, if you're doing it on a sole proprietorship basis, how much can you yourself put into it, and whether if the prototype ends up working, what's the revenue stream look like? It can always start as a sole proprietorship, and how much is that going to cost? So are you going to need funding for it? How soon does the revenue start coming in? I think those are a lot of the questions that will dictate whether a corporation makes sense or not, because becoming incorporated is great. But you need to keep in mind that there will be those upfront administration costs to do that. So yeah, I think it depends on what you foresee as a structure in terms of financially, and then also is there any personal risk associated with the prototype and how it's operating.
Okay. So what would you, in your opinion, what would be the best thing to do?
What's the time period, I would say, from you being able to generate cash flow from your prototype? Is it imminent?
My product, I'm just working with the CSK Kitchen, which is in PEI, and their time frame is 3 months to develop my product. And from there's a company called Biofood Tech. My product would be going there for small batches, and then and then once that is approved, small batches is approved by the customers, then I'm going to form actual company. So for that time being, what would be the best suggestions that you can give?
Yeah, I mean, it sounds like you're not far off from generating revenue. So wouldn't foresee the administrative costs being too much of a barrier for yourself, because it seems like there's quite a bit of certainties, and I think from it would depend from a profit standpoint of, obviously you generating income is more tax advantageous in a corporation, so that's a consideration. And also, are you going to need those funds personally? So are you going to, is the corporation going to get the funds and then you're going to utilize that personally in order to live your day-to-day life? Because in that case, you might as well just keep the sole proprietorship, right?
Okay.
Or are you working on the side that can offset your expenses or your day-to-day living?
On the side.
On the side. Yeah. Yeah. So I think if you're working on the side, I would consider creating a corporation, just because if you're generating enough income, one through your employment and through sole proprietorship, I would venture to assume your taxation would be worse on the sole proprietorship side.
Okay. Thank you.
Without seeing it, but I would get advice from a professional just so they can get all of the numbers. But that's my assumption-based response, I'll say.
Okay. Thank you.
Yeah.
What are the upfront costs, would you say, like ballpark for
I want to say it's like in excess of $1,000. And I think it really depends on how, like, are you going to need to utilize lawyers, and how much so. So I think it ranges, but I would venture to assume right around like $500 to $1,000 on the low side. But the structure of your business can exceed that too.
We've got a question from Ren in the chat. She says, other than IKPs, etc., are there specific recommendations to reduce risks as a sole proprietor?
As a sole proprietor, I think the biggest thing would be utilizing registered accounts. So like putting into your RSP as a sole proprietor, if you do have excess funds that you're potentially not going to need to live your day-to-day expenses, maybe look at insurance to as sort of a safety guard for your family. Those are really the major two things I would consider. Unfortunately, a sole proprietor, the way it operates is very much like how you would operate personally. So getting creditor protection is a little bit more of a limitation.
Are there any more questions? Anybody? All right. Well, I think that about wraps it up. Thank you so much, Jordan. That was awesome. I definitely learned a lot.
Appreciate it.
And I hope everyone else did too. So for those of you that are still here, you can contact Jordan through his contact details that will be on the slide. So we'll send those over to you via email. And then a few things on the list. So here at CEED, we host events. So we host a variety of different events every month. They're free and great opportunity to meet new people and grow your network. So if you'd like to, pop by one of our speed networking events or check out what events we have, it's all on Eventbrite, or you can check it out on CEED.ca. And then another thing is, for small business owners, we offer tons of programs at CEED to help you, on your way to success. So you can book a free call with CEED to see if we can help you out, and that's on our website as well. And then lastly, we just launched something called the Hub NS, which is a community for small entrepreneurs. And so if you haven't made an account there yet, we'd greatly appreciate you do that. Interact on there. There's tons of great people, and so lots of connections to be made. Other than that, we want to thank you all for coming, and hope you enjoy the rest of your day.
Hi, I have a question.